Hello guys, welcome back to my YouTube channel. In this video we will cover what is credit. Credit is basically the ability to borrow money under the agreement that you will repay the debt or later. Credit agreement typically come with a repayment term that include when payment will be due plus any interest and fees that you will need to pay. Credit also refer to an individual history of borrowing and repaying debt. Credit is basically an agreement between a lender and a borrower that allows the borrower to obtain funds, goods, or services now and repay them later. Credit can also refer to your history of borrowing and repaying money. Having good credit, a history of repaying loans of time and on time, and as agreed, can make it easier to get approved for a range of credit products. Types of credit: there are all sort of the credit product designed to accomplish different goals like earning points on a purchase or getting an education. Zooming out, most types of the credit can be broadly classified as either installment credit or revolving credit. So, what is installment credit? Credit is a lump sum of money that you borrow and repay over time. Installment credit agreements come with a set of a repayment schedule and typically a fixed interest rate. You agree to the amount of your loan and the period of repayment and the amount of your fixed monthly payment at the onset. Then you continue to make payments towards your principal balance and interest until the loan is paid off. Example of installment credit include personal loan, car loan, student loan, and mortgage. So, what is revolving credit? Revolving credit is a type of credit that allows you to borrow up to a set credit limit. You will typically be required to make minimum payments each monthly, and carrying or revolving a balance will usually result in interest charges. With revolving credit, you can borrow what you want to when you when you want to up to your credit limit. After you pay down your balance, you are free to borrow up to your credit limit again. If you do not have a balance in a given statement period, if you do not be required to make a payment. So, revolving credit basically a product typically come with a variable interest rate. This means that the amount of interest rate you will pay to borrow can fluctuate over time, changing to match benchmark market rates. Generally speaking, interest rate for valuable or revolving credit are higher than what you will pay for fixed rate installment loans that said pay off your balance before interest begins to cure allows you to benefit from the convenience of revolving credit without sacrificing money to interest. For example, our revolving credit include credit cards, home equity line of credit, which we call it HEOLOC, and personal line of credit. Why is credit important? Credit is important if you plan to borrow money from major purchases such as a car or a home. Credit can also come into play in other areas of your life too, like you are trying to lower your insurance premium or set up utilities. Qualifying for new credit, your credit score has a big impact on which credit card and loans you will be able to get approved for. In addition to looking at your credit history to qualifying you lending may also base the interest rate you will pay to borrow on your credit score. Broadly speaking, higher credit score help you access a wider range of credit with a better terms. Rental a home: some rental companies and landlord pulls your credit as a part of your rental application. A low score can disqualify you from some rentals or require you to put down a larger security deposit or find a co-signer to guarantee you rent. Buying a home is the case with other loans type. Your credit is qualifying factor when you apply for a mortgage. Focusing on building credit will before you are ready to buy you can help you ensure you are eligible to borrow and help you access the lower mortgage rates when it's time to buy. Insurance rates: some insurers look at the credit based insurance scores when setting your home and auto insurance premium. Credit based insurance scores use your credit history to calculate how likely you to file a claim. Note that some states restrict the use of the credit based insurance scores. Utility companies check your credit before agreeing to enroll you in services or lend you equipment. If your credit is a low, a utility company may ask you to put down a deposit to receive services. Applying for a job: some employers may review your credit history as a part of their background checks during the hire process. Note that the employers cannot see your credit score, only a limited version of your credit